we have an amazing guest.
Tanul Mishra, a woman entrepreneur who transitioned from decades of corporate experience in telecom, F&B payments, and fintech to running her own venture Aonia Labs, a growth enabler for fintech in India.
Financial access will get democratized in the country, and this would mean that
How do you see these numbers?
Everybody is using AI today, math destruction.
How do you leverage which piece of fintech could add value? So it could be a payments or a lending, insure tech.
It was myth busting, and creating awareness, because like I said, there was not too much.
Good morning, everyone. Today we have an amazing guest, Tanul Mishra. She is a woman entrepreneur, I would say, moving from a corporate journey of decades of experience, starting from telecom to F&B to the payment industry to the fintech industry. Now she is running her own venture, Aonia Labs Private Limited, which is fintech accelerator. They are enabler for growth of fintech in India. So Tanu, thank you so much. Welcome to the podcast, the UpSkill School.
Thank you so much for having me over, Abhishek. It's a pleasure.
So just tell us how Aonia started, what is behind the scene, and what are the aha moments which made you do it?
So the behind story is a little longer, so I'll sort of try and run through it quickly. I was in the corporate world, like you mentioned, through media, telecom, and payments. But around 2012, I decided it was time to push the boundaries, and I co-founded a startup called Eatalish, which focused on sourcing artisanal food products across the country and making it available both online and modern trade outlets. We had an exit in 2018, but during the course of this journey, both my co-founder Shipra and I had, relevant networks so we could leverage and grow. But the startup scene was just beginning to expand and hot up at that point in time. And our journey made us realize that an entrepreneur needs a lot of help when building a business, right? It's not just about access to capital, but capital utilization, the network, the credibility to partner with the right folks, compliances, and generic skill areas such as marketing. And you don't have that kind of money, right? When you work for a company, there's tons of money available, budgets are available, you do things. That's not the case when you're an entrepreneur. You're bootstrapped for a large part of time. So when we had an exit, I wanted to look at being in the startup space and make a difference here and do something within the ecosystem. And that's when I started looking at the ecosystem globally and seeing how things work. I realized that they had large startups, but they also had a large support system in form of incubators and accelerators. So think of numbers like 2,500 plus and 1,500 plus. And India had 500 plus incubators and accelerators. That gap was so wide. That chasm was so huge. And it's not just a number, but even the type of accelerators and incubators. So, US has very specialized incubators. There'll be space-specific incubators. There will be insurance-specific incubators. And in India, when we looked at the space, most of the incubators were either education institute-led incubators or government-led incubators. The third bit was corporate. So think of like PayPal running a PayPal-specific incubator. So while each of these have their own advantages, one of the largest disadvantages being agnostic and picking up companies because you're backing the profitability and idea, the sharp business acumen that a bunch of people would bring. So with that in mind, I decided to create Aonia. Now, the decision for me was to go either generic or specific. And, I think that every business needs a very specific set of knowledge access and a very specific set of network when you want to really grow quickly and, hit the inflection point faster, and which is where the sector focus came in. And I had worked at Paymate. So the exposure to fintech there had made me understand that India is ripe for the fintech story with the right push from the government initiatives towards digitization and financial literacy. And, financial access will get democratized in the country. And this would mean that businesses would need intervention and a safe space to grow with the right access. And that's how Aonia came about.
The startup ecosystem in many ways. So I think this is great. Now, can you tell me what are the key challenges you faced, especially in your initial days to establish Aonia, get the right people, get the right kind of startups, because that would be, I'm sure, will be a very important, crucial juncture of your career and entrepreneurship.
Yeah, so absolutely. I think the first challenge for us, right, was myth busting. So, and creating awareness, because like I said, there was not too much, many incubators in the country. The models were different. So entrepreneurs didn't know, one, how to leverage incubators. Two, there was less awareness. So they really didn't understand what incubators contributed. And they were also not comfortable with some of the existing models. So for us, the challenge was about actually convincing the first portfolio startups about the value we bring to the table. See, for any investor or incubator and accelerator, while it looks like we sit in a position of power, it is very important for us to also seek startups which are going to be path breaking, right? Because they are our portfolio. That's how we grow.
Absolutely.
So for us, it was about convincing these guys about the value that we add to their business, about the conviction of the business model that we're building, and like I said, a lot of myth busting. So those were some of the things that we faced, but thankfully, over a period of time, the system has grown, the ecosystem has expanded, and our alumni do a great job of putting out success stories and getting us a lot of reference startups too.
Yeah. So let me take you one data point which I sort of did based on my research. The Indian fintech startup has a substantial growth path because we see that almost 100 plus $1 billion of market size is already there as of now in 2024, and with a compounding CAGR of around 30 to 35% on an annual basis, we see there is a potential of the entire market doing 4x to as to what currently is by 2029. How
Right.
do you see these numbers, and how do you leverage which piece of fintech could add value? So it could be a payments or a lending, insure tech. What is any specific thought there? Because many of the founders who are watching this would like to know specifics of your interest and also the leverage of possibility of investment.
So okay, the numbers speak for the potential themselves, right? And that's exactly why we got into the space in the first. That was the thought. Like the market is huge, but it's not just vast, but it's also about going narrow and deep in the segment. So when we look at the fintech space, right, for us, I don't know whether we want to call it fintech or tech fins, but basically any technology that solves a problem in the financial segment is something that we consider. We have a panel of experts, as we call them, who are our mentors and advisors, and they are a part of the shortlisting process. For us, it is very important that the startup is solving an actual problem, right, and doing it differently. See, everyone says payments is very crowded, right? There are so many things happening in payments, but there are areas of payments which will be right for distant. And if you're solving that, we look at it. The other thing that we're extremely sort of conscious about is that, when you're using the technology, are you using it because it sounds cool and everyone's talking about it, or is it really solving a problem and that's why you're using it? We're one of the few people who are very sort of gung-ho about insurtech as a segment.
Wow.
We're yet to find startups doing exciting work in this domain who we can incubate, but if you are an insurtech startup building in this country, we look at it. If you look at our panel of advisors and mentors that we've created, it's very insurance heavy also, because we've been very gung-ho about this segment. We believe that in India, insurtech is ripe. The other area that we see as exciting is the tier 2, tier 3 cities. There are problems to be solved there. We believe that founders and people coming from those areas will be able to do that better. So I like to call them as emerging clusters. Moving beyond the metros and looking at these emerging clusters, and that's what we're excited about. So for us, we have about 5 startups who've been incubated from Ahmedabad, one from a small town in Kerala. So we're excited about startups coming from tier 2 emerging clusters, as well as insurtech, cybersecurity, because I believe that with the amount of digitization that we have, the fraud and risk compliances will go up. Right. And this is not just from an institutional perspective, such as banks and NBFCs, but even individuals would need solutions to protect them. Right. So these are the areas that we're excited about.
Yeah. So in fact, I'm sort of taking forward to what you said, especially the insurance piece. And let me sort of bring it in the context of the regulatory perspective, because a lot of the founders who are watching this podcast who could benefit with your expertise and how you can accelerate and incubate them and give them an opportunity to make an impact in the fintech world, is that IRDAI, the way we have Reserve Bank of India, which regulates the bank NBFCs in India, we have IRDAI, which is insurance regulator. They have various business models in which they operate. So there is something called corporate agency model. There is something called web aggregator model. There's something called insurance broker model, and there is something called the complete insurer model. So I think these fintechs, and I'm sort of dealing with few of the fintechs on this field, I realized that the insurance penetration in India is still low. People still don't get that opportunity to get motivated to buy insurance, and especially the life insurance, which is very less captured in the market, and there's a lot of risk involved in terms of the KYC and other aspect. So I think all those fintechs who want to make an impact, of course, payments is crowded, lending is getting crowded because a lot of fintechs are running for NBFC licenses and trying to create an impact by having loan in their own books. But if you are an insurance piece, if you want to solve insurance issues in India, especially how the claims are settled, especially how the complaints and how the regulatory requirements of insurance can be done, then I think this is the right place and right conversation you are in.
Awesome. Yeah, that's great input. Yeah.
Yeah. Let me move forward. You said digital frauds. We know our Prime Minister also talked about how digital frauds are increasing. And I was reading a report of RBI. In fact, the retail frauds are contributing substantially more than the corporate frauds. And we also see
Sure.
because of the data privacy law coming to picture, the rules are getting framed now. We have an act already passed by Parliament last year. We are going to see how the data has to be handled for the customer. And then third is the specific sectoral regulatory compliances, whether it is RBI, SEBI, IRDA, MFI, whatever business you are in. Now, and of course, you see this as a potential field for growth, and you can, of course, help founders to sort of leverage and bring value there. But any specific startup, and as an example, you want to share with us whom you have helped, or maybe a success story, which sort of with your help, it is able to sort of give impact in the entire scheme of things, especially on the regulatory and other fields.
So regulatory, I want to talk about like a very interesting. It's not really regulatory, but it sort of fits into the framework that we're talking about. So we had a startup from Ahmedabad. It's called Subsidy X. Now it's of two co-founders. One is is a CA, and the other is a tech person. And the problem statement that they had is the government gives a lot of subsidies to businesses, but most businesses do not know how to sort of leverage these subsidies, or the process is extremely cumbersome. Now, if you get subsidies, it builds your cash flow, right? I mean, it gives you a lot of leeway, and the working capital requirements get dealt with easily. So they have created a business where they help you understand whether you're eligible for subsidies or not. If so, how are you eligible for it? Help you create a report, and they bring down the time frame to actually process the subsidies from, say, 12 months to almost cut it down by 50 to 60%. So that's like one problem statement they're dealing with. And when I looked at it, I was amazed at the amount of difference it can make to businesses in terms of their capital and workflow requirements. Another startup that we have, for example, is IntelliGear, right? Again, I won't call it but software which reduces your time frame for so basically you have SAP and you have Tally. Now even these need a little more work from the CAs to sort of build reports out and do what they need to do. So they built a layer on top of these softwares which can make your processing time even lesser. So these are all ancillary businesses that are supporting the compliance requirements that exist today. Yeah. So that's what we're.
And I'm sort of reaching out to my initial clients, and I've shown the demo. Now, what happened? What has happened after the first demo and second demo? They said the client is asking, "Do you have existing clients?" So I said, "Who came first,
Classic.
chicken or egg? Who came first? Whether the egg came or chicken came?" So I think why this dilemma? Why the industry always sometime when they have to sit on the corporate desks and make a call to buy a product, why they judge such entrepreneurs on the lines that do you have a existing clientele base or not? Because any new company which is big today has started small from the baby steps, and they have gone big because of those baby steps being appreciated by somebody else. Why this happening? Because I see sometimes the founders get discouraged, and after so much of hit and trial and miss, they have to crack that first client who becomes the base for other client. But that is saddening to see that the corporate should have big heart when they encourage startup. What do you say? What's your thoughts, and share your experience, Tanul?
Okay, so I've been on the corporate side, right? So as a corporate, right, you have a lot on the line in terms of image and reputation and credibility. And it is when you're taking a new player, you have no idea why you are the best, right? Why you are the right guys to say it. I mean, I will find 100 ways to justify why I'm the right person for this business, but it's hard for a corporate to sort of take those words on face value, right? Which is where recommendations, testimonials, incubators, accelerators, and investor connects help because they add the credibility to the business. I can say this specifically for the BFSI sector. Like you rightly mentioned, they are all governed by compliances and bodies like RBI, IRDA, SEBI. There are a set of regulations. You and I both know that RBI has like a set of guidelines that a bank has to follow before they onboard a vendor or a partner, right? Most young companies are not even aware about these guidelines. So they won't even know how to comply, but the onus is on the banks, and the penalties that they could be subjected to, plus the reputation loss, is huge. So I'm not justifying and saying that what they do is correct, but they have a genuine dilemma, right? And as somebody who's selling a product, the onus is on me to convince you about why I am the right person, both in terms of the solution and credibility. We also know that startups, while we have a lot of startups which sort of come into play, a lot of them close down too. Now, imagine a corporate and you've taken a service and the startup shuts doors. What do you do, right? Your customers are online. It's a huge risk from an established entity perspective. And I think that's why they keep asking, where is your first client? As a startup, it's hard to sort of get that break if everybody asks you that questions. So my recommendation to most founders is reach out to people who can add that credibility to you, be it incubators, accelerators, communities, ex-bosses, friends, who can provide that angle of credibility to you to get into it, right?
So I think
I'll give you a story. In our first venture, we were in food products, artisanal food products sourced from across India to modern trade outlets. My first deal took me 8 months to crack. Okay. I used to keep visiting that, and literally, he would keep saying, I need testimonials of people buying your products. I need things. We were a B2C. We were trying to scale. So, sometimes it is.
So much for great insight. Very happy to have you and have those practical perspective from your side. One is I'm going to talk on the AI piece, because you know how AI is disrupting, and of course every day AI is moving more faster than any product launches. So I'm a bit worried because I want to sort of catch up what is happening in AI. I see something new coming up and something new getting offered by the globe. Point number 2 is the regulations, because we know fintech is regulated in a way that we need to be compliant. And of course, what we try to do in the UpSkill School is to bring our 19 years of experience in banking, NBFC, and fintech, and try to coach people in the right manner so that they are forming a compliant organization and they don't fear penalties from the regulator across RBI, SEBI, MFI, IRDA, whatever federal regulators we have. And third is a specific point on how do you do market research, what guidance you want to give it to the founders when they come to you, what kind of beforehand market research or market analysis they should do. So I'll begin with the last one first.
The market research? So look, you're a founder. You are coming and pitching an idea to me and saying, I'm building this out. You need to have conviction in this space, and you need to be able to convince me about the conviction that you bring to the table. And that has to be backed by numbers, not just by gut feel, right? So I need to understand that you are the expert. I won't say expert, but you have enough understanding of this domain to be able to do it. So if you're building, let's just say, okay, if you're building in the insurance space, I need you to be aware about, what is the insurance market that you're looking at in India, right? There's life, non-life, right? Which space are you building in? What are the compliances that you will have to cater? At least be aware at a 30,000 feet level, right? What is the problem statement that you're solving? Are you going to look at the emerging clusters, or are you going to go metro first? And again, these are your assumptions, but they have to be backed by enough data, enough understanding of the market. So as a founder, you need to be on very solid ground about why you're building this. Why is it that you have decided to solve this problem? Because unless the person who has the conviction to solve, it's very difficult to, in fact, carry that idea for long and sustain that business. Absolutely. Yeah. So I hope that answers like that question. And absolutely, because unless you have a sort of vertical deep research on a particular aspect, and of course an horizontal understanding of the entire dynamics, would definitely go a long way to sort of prove you and your idea to be creating impact, both financially and also in your own life. Yeah.
On the regulations piece, and I'm sort of tracking this piece for quite a while, I would say, I see banks are getting penalized nowadays. And
Right.
I tell you, I was talking to a founder, a very senior veteran, and he told me that, one of the banks got penalized and our co-branded card business got stopped because we were a co-branded partner. Likewise, there is a fintech which is doing a digital lending business. They were operating as an LSPDL. LSPDL is how they can
Of course.
enable the entire business of lending. And their banker, who were a sponsor bank for them, was told to stop the business for selling online loan products. So these guys got impacted. And I've seen businesses getting impacted wherein their customer onboarding of cards, which could be generating worth of revenues for them, got stopped just one day because the circular has come from RBI saying that, they are not compliant. Now, I see this as a recurring issue in the industry because sometimes we are not being taught in our books how to do RBI, SEBI, MFIRDA, what is a regulator's IK, how should approach handling all of these, what are implications, not implications. We always see compliance as a cost, and we end up not putting enough efforts and money there, and we end up sort of losing substantial business when we are actually on the high. How do you see this, and what kind of measures you want to sort of bring in your startups so that they are value generating but also best ethical compliant organizations?
So, okay, look, I'm going to take a little bit more time to answer this question, right? Because there's
Please.
multiple aspects
All yours.
of it, and
All
it's a
yours.
very important aspect of running any business. The reason fintech startups or banks have heavy regulations and compliances is because you're dealing with money, especially in a country like India, where the population is extremely diverse in terms of the strata, as well as the understanding, the language, the impact of practices and can be huge, right? You and I discussed about how the retail fraud is so much more than digital fraud, right? What happens is all new solutions and innovations happen in ambiguity. So wherever there is an ambiguity in a regulation, that is the space that most people pick because that is what is right for innovation at that particular stage. Having said that, once you build it, there is an impact that you are going to foresee. Now, that impact in the initial days seems very little, right? So if in a business, let's just say if you're building a business and you're losing 30 paise on a transaction, in the first few days, it seems like 3 rupees on a 10 transaction. But if you do this in millions, it adds up to a lot, right? So the impact as you grow keeps increasing. And I think businesses need to be sort of a little more aware about this. So the way I look at it is that RBI or IRDA or any regulator does not come out with a regulation overnight. There is enough and more chatter around it in publications, forums, websites, if you're keeping track on it. If you are in that space, you should be able to pick up the chatter, or you should find the right guys who deal with this professionally, who do this. Reliance, when I worked at Reliance Telecom, in the telecom domain, wireline domain, they had one person who was only compliance for wireline. And now I understand that as a startup, like you said, people look at it as a cost, and it is a cost, right? It is 100% a cost. And when you're a startup, you are always looking at funds and saying what is critical, what is important, and what is sort of okay to let go. Sometimes compliance falls under that domain, right? The compliance costs have been increasing over a period of time. It is definitely hard to sort of run a business when your fund is only so much and you want to dedicate it to growing the business or compliance. It is going to take a backseat. But I also think that collaborate and deal industry segments which are established. So think of banks, think of players in insurance. So BFSI segment, which is matured enough. I think it's time for fintechs and BFSI, veterans to figure out a joint way to deal with compliances. Because while compliances are cumbersome and costly, the amount of loss that you can incur both from a BFSI perspective in terms of credibility and actual financial loss, and obviously loss of business with the fintechs is huge. Is there a way to share costs? Is there a way to help fintechs and young companies stay compliant? Banks have been doing it forever. They have experts, right? We can collaborate and figure a path out. It doesn't have to be a financial burden for one business. It can be a shared burden in all aspects, right? So I think our approach to compliance has to change. We are going through a flux because there are new ideas, new businesses and growths coming in. The regulators will do things that we don't like as businesses, okay? Yes. But it's their job. the customer has to be a meeting point. And I think it's time that incubators and accelerators start being that bridge between compliance entities as well as, industries, so that it's a shared burden rather than a one burden shared by one sort of segment.
Yes, I think very rightly said. And I sort of pick one word from you that, and I'm sort of discussing in many forums when I'm meeting, is that fintech wants to innovate, but regulator wants to regulate. Now, how you can innovate with regulation is what the game is all about. So
I don't know if I don't know if the regulator wants to regulate. I don't think that's their objective. Their objective is to protect the interest of the larger audience.
And of course, an important topic which I want to sort of understand from you and everyone else would be, of course, in this conversation is AI, your thoughts, and especially have you picked up any startups who are enabling and solving with the help of AI, and what excites you there?
So tell me who's not using AI. Every pitch deck I get is using AI. Okay.
Okay.
So every pitch deck I get
in a
has
real
AI.
way, in a substantial way, or just for the sake of AI-enabled conversations?
No, some of them are really using it. Some of them are just using the term AI. But yes, everybody is using AI today. I think it's a very interesting time. I love this book called Weapons of Math Destruction. Okay. It talks about technology and it talks about emerging technologies and AI. I think, look, I'm very excited about how this shapes up. Like I said, it's a flux, it's ever changing, but we have to be aware about something. So AI is feeding on whatever is given to it, right? So which means it's also going to feed on the biases that come in.
Yes.
So in the book that I was talking about, Weapons of Math Destruction, the author, she beautifully puts it and says sometimes these technologies have a way of marginalizing the marginalized already, because your system is sort of feeding that, right? And that's how. So I think we have to be aware about it. Should businesses or people feel threatened with AI? No, I don't think so. It's the same conversation I'm sure people would have had when the era of industrialization hit. Industrialization also caused impact. There were job losses even then. But as humans, we have to reinvent our skill sets. We have to keep growing and adding and surviving, right? So I'm very excited about AI. I want to see what is the kind of solutions that it can bring in. And but I also want to be very wary about how we're using it, so we don't end up marginalizing the already marginalized people in the segment. I think that's something we have to be very aware of while we're building solutions.
That's how we can sort of tap on the usage in such a way that it is sort of creating an equal impact and growth for everybody else. If I need to sort of give you 3 words and you need to give them, put them in the order of priority. Yeah. So the 3 words are insure tech, payment tech, and lending tech.
Insure tech, lending tech, and payment tech.
Okay, so you see payment is overcrowded. I can clearly sense that payment is, of course, overcrowded, and maybe...
I was actually torn. I was torn between lending tech and payment tech. But yes, if I had to, then yes, that's it.
So thank you so much, Tanul, for joining in. I hope you had a great, you liked the conversation.
I did. Thank you very much. It was extremely interesting. It kept me thinking all the time.
Okay, so we try our level best to keep this conversation as genuine as possible, as authentic as we all are. We both are as authentic, bring our personal experiences and perspective for betterment of the ecosystem. So thank you so much for your valuable time, and happy to meet you. And thanks a lot once again.
Same here. Thank you so much for having me over. The conversation was really good and engaging. Thank you so much.